Hi, it's Jane Johnston with the Briar Hill Group at Pemberton Homes, and I'm here today to talk about tax assessment in British Columbia and how it relates to market value as well as appraisals. So the first thing is, what is a tax assessment? A tax assessment is based on what the government thinks the value of your house is. It's to determine what the mill rate would be and how they raise taxes for the municipality. And how they do that is they go to the local municipality and they determine what upgrades you have filed for, and so they're looking at permits, and they also look at the age of your house and the size of your land. And from that, they determine kind of an average value. So if you live in an area with a lot of new construction and there are a lot of sales, it's really easy for BC Assessment to determine the value because they're just looking at very comparable homes. However, after 40 years or so, if you have two homes that are side by side and one's been well taken care of and one hasn't, they'll be assessed the same if none of them have applied for permits and outwardly they look the same, but their market value will be very different. So that brings us to market value. So market value is when a realtor comes in and they're looking at current listings, pending listings, those that have just sold, and then sold listings, those that have been on the market and sold in the past 6 months or a year, depending on how far you go back. So in that case, what happens is we are looking at what the trend of the market is compared to homes in the area, and we're looking at what we think what is available at the time, and we're looking at you as a seller and how motivated you are to sell your property. The third value is an appraisal. So how an appraisal works is usually a bank calls for it, or maybe an individual will. And you get an appraiser in, and this is a person who's an independent body who has no vested interest in selling your house, and they're just giving you value. Usually it's based either on the lending value for a bank, it's based on the value for a settlement for a divorce, or it could be for a line of credit. So they're looking only at sales in the area. They don't look at what's currently on the market, and they're kind of looking at more hard data. So between the three, you can get a very different valuation. So recently I had a client who their tax assessment was $780,000. Their appraisal was $1.2 million, and their purchase price was $900,000. So as you can see, all are very different, and it depends on the uniqueness of the property and other factors. So if you have any questions, give me a call or you could go to my website, www.briarhillgroup.com. Thanks and take care. Have a great day.